From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 18th, 2015. In just a moment, I'll be taking a look at the GBPUSD, Greater British Pound versus the US dollar for today's analysis. But first, I want to recap a couple of trade suggestions made over the past few days. First off, on Wednesday, of course, we had the raise of interest rates out of the U.S., which caused a strengthening of the U.S. dollar across many of the currency pairs. So with that, we were looking to buy into support on currency pairs where the trend would be expected to go up and sell into resistance on currency pairs where the trend was expected to go down with that strengthening of the U.S. dollar on that interest rate news. Well, here on the U.S. franc, we were looking to buy on dips to support or breaks of resistance for the franc. So during that news, or just shortly after that news, we looked for an opportunity as the market dipped down here into the 98.40 level to look for a buy. You can see the trade still going down here at the very bottom of my chart, sitting about 90 pips of profit at the current moment. We've seen the push above the support or the resistance zone, the blue shaded area, 9900 to 9920. That's the blue zone. So we've moved the stop loss up, of course, to protect profit on the current entry from down here at the green shaded area. If you're not into a buy, your next opportunity to go long and buy this currency pair is as it challenges here at the blue shaded area between 9900 and 9920. So that's what I would be looking for the day today. Between 9920 and 9900, that becomes your entry point for the U.S. franc. Anything underneath that blue zone would likely target back down to the lows, and that's all the way back down here towards the green shaded area at the very bottom of the chart. And I'm trying to get that selected so I can move this arrow over here. So that would be your next support if it gets under the blue shaded area. Targeting, of course, right now on the current trade or any new trades back up here to the parity level 1.0 for the U.S. franc. Moving over to the U.S. yen, yesterday we were looking for an opportunity to buy on a breakout of resistance. Of course, caution as we approach the 10 p.m. Eastern U.S. time frame. We had some news out of Japan. Monetary policy statement caused quite a bit of volatility for the Japanese pairs. As we zoom it on down to the 4-hour time frame, you can see the market did have quite a bit of volatility. We did buy yesterday on top of the blue shaded area because we were looking for a dip back down on top of it as support. We bought it on top of that right around the 122.50 level. Take it on down to the 1-hour time frame, and you can see just here at the top of the chart, and I'm looking right here where the market found support at 122.45.50, made a run at that news all the way back up about 100 pips, 110 pips or so into the 123s before falling. So if you were using a tool like the Trade Manager to manage the trade, is perhaps you were able to capture quite a decent amount of profit as it moved all the way up into the 123s. If you didn't, and you weren't watching the news at the time, then of course you likely had a stop loss as the market was quite volatile and came down rapidly. So it really will depend on how you manage that trade. It should have been a profitable trade here for you on the U.S. yen. Now, moving over to the GBPUSD, Great British Pound versus the U.S. dollar, of course, we have the downtrend channel. That's nothing really new for us. We've seen a downtrend channel for several months. Past couple of days have been, of course, very bearish here for this currency pair. 1, 2, 3, 4 days. A very bearish move from the top of the channel as it continued to pressure lower on that news out of the U.S. on Wednesday. You can see holding underneath the orange shaded area, 49.20 to 49.50 is the main focus. If we're looking to sell, we look to sell on a break of support or rally to resistance. Well, we have both of those things going on here. Right now, you can see the market pushed underneath this last support. So a break of support is what you're looking for, 49.20 to 55. You take it on down to the 4-hour time frame, you can see we're rallying underneath that support as resistance. So I say that every day. Break support, which it's done. Rally to resistance becomes the selling opportunity for the currency pair. So for the day today, as long as it's underneath 49.20 to 55, I think we're looking to go short on this currency pair, targeting all the way down towards the low 48s, the purple shaded area, 48.30 to 48.10. The risk, and this is the risk in every scenario, is that it doesn't do what you expect. The risk is it breaks through that resistance and starts working its way higher. So I have the trade already in at 49.20, selling underneath the orange zone. We have the Trade Manager applied to the trade.